Joining me this Thursday is John Doody, editor of the Gold Stock Analysts newsletter. John, good to see you again.
Well, great. It's good to see you. I don't think we've seen you for a few months, except on video, of course.
Now, John, we look forward to seeing you at the end of the month when we come out to cover your Gold Stock Analyst Day, which we'll speak about in a little bit. But first, let's look at the mining stocks. I know it's one of your areas of expertise. And a lot of analysts I've recently have on are calling for a bottom in the mining stocks. Now, a lot of results will be coming out next week. John, what can we expect?
Well, first of all, when it comes to gold stocks, it's a stock picker's market. Last year, all the broad indexes of gold stocks were down, HEY, the XAU, GDX, and so forth. But our stocks, our top 10 portfolio was up 12%. So it's, if you're just going to look at the indexes, you're going to get a false impression about the ability to make money in the gold stock market. You can. So far this year, we're up about 12% too. And although gold is up a little bit and the indexes are up some too. But it's really it's a picker's market. You have to understand what you're buying. If you're just going to buy Newmont and Barrick, you're probably not going to do very well. They're just elephants that can't dance. You need more nimble stocks, but stocks that have something to them, not just exploration stocks that we're way too early. If this is a bull market starting, and we think it is, we're way too early for the exploration stocks to be doing much.
All right, John, let's talk gold price now. We've seen so much volatility with the price since the start of the year. What do you think is supporting the gold price right now, John? What factors are at play?
Well, it's funny, the mine production information came out last year, about 3,100 tons. This came out a couple of days ago. And 25% of that mine production came from Russia and China. And that production doesn't go into the markets. The Chinese central bank buys all the gold produced in China. And even if it's produced by a Chinese, a North American miner, it's all sold to the Chinese central bank. And in Russia, it's the same thing. The Russian central bank buys all the gold. But in any case, the 25% of the production is not coming to the market. There's something wrong here. This is like a big pimple that's coming to a head, I think. And I don't know exactly when that's going to happen, but it's going to explode. And, I'm not an arm-waving kind of, $2,000 gold, $3,000. I never do that kind of stuff. But I just think there's a head being built up in this market that it's basically it's all investors, it's all of us, and a lot of smart money too, sort of against the big investment banks that are playing the gold market and on the short side, and I think the Pimple's going to burst this year, and where the price goes, who knows, but it's going to go higher.
John, I'm going to try and recover from that visual of the pimple, but you mentioned a few currencies, and this leads me to my next question about the appreciation of the US dollar. We're seeing other currencies be deflated around the world. A, John, are we in a currency war? And B, what do you make of the run-up in the US dollar?
Well, it's been pretty surprising how strong the dollar's been. But again, as people like to say, it's the best horse in the glue factory. There's no question that the dollar has got problems, but it probably has less problems than anybody else. And it actually has more problems than gold, though. So we've got... gold really has the potential to run higher now. As the dollar stalls at this 95, the Dixie's at 95. If it stalls around this level, it's up significantly, about 20% from where its bottom was or low was last year. And I think at some point, U.S. manufacturers that with foreign businesses are going to start complaining that the strong dollar is hurting their business. That's going to hurt the U.S. stock market. The U.S. stock market has not done as well as gold this year. And yet, for the miners, the falling dollar, the falling currencies that they're producing in, whether it's the Canadian dollar or the Australian dollar or the Mexican peso, all the currencies lower means that when they translate their cash cost of production back into U.S. dollars, they're falling. So the miners are going to earn more money this year than last year. And even if gold does nothing, they're going to earn more money. Now, I don't think you buy gold stocks for their profits. They don't really pay out much of a dividend. You buy them for the optionality, for the potential that of price appreciation, because all the gold that they've yet to mine, and remember, most mining companies have 10 times the reserves at least of their annual production. When gold goes up $1, all those reserves go up $1 in value too. So that's where the leverage in gold stocks come from. That's why gold stocks typically go 2 to 3 times more than the gold price. And of course, it goes the other way too, as people sadly learned last year.
All right, John, before we wrap, many bank forecasts are expecting gold to waver mid-year on the basis that the Fed will raise rates. Do you agree? Will the Fed hike rates this year?
I think they will do a token increase, and that's it. They will take out their gun, shoot a bullet into the ground, so everybody hears the sound of interest rate increase. It might be 0.25%. That, if it was any more than that, I'd take the gun and shoot myself. I just don't see it.
All right, John, this brings me to my final point. Your Gold Stock Analyst Day, I know it's something close to your heart. It's a day you put on for your subscribers at the end of February. We'll be there and covering the conference for our viewers back home. But what can people expect this year?
Well, it's something we do for subscribers only. You have to be a subscriber to come. But we have the top 10 gold stocks, the top management. And this is not the little guys, the investor relations people. This is typically the top guy from the companies, and also from our Fave 5 silver stocks. So we have 15 top guys coming to our conference, and on February 22nd. It's at the Pier 66 Resort in Fort Lauderdale. The keynote speaker this year, Jim Grant. Everybody knows him as the editor of Grant's Interest Rate Observer. He's a great speaker. What a wordsmith he is. And he's fascinating to listen to, and he's a gold buyer.
Well, I look forward to attending the conference, John. Thanks so much.
Well, thank you. Have a good rest of February. We'll see you at the end of the month.
And thank you so much for watching. For those of you interested in learning more about John Doody's Gold Stock Analyst Day, you can do so at the link below. In the meantime, have a great day. We'll see you tomorrow.